All right, welcome to the Nadex application and strategy webinar series. My name is Daryl Martin. I'm with apexinvesting.com. It's a website I started about 5-6 years ago. Just some friends asking for me to help them, and it just sort of grew from there. It's a big community, almost 10,000 traders now, just traders helping traders and sharing ideas and growing together as traders. Lots of free education, a binary scanner tool for Nadex. It's free for you to use. We have deviation levels, we have forums where you can ask questions about anything and everything, we have news calendars, and a lot more. But definitely check out our website there. Got to start out with the standard risk disclosures. Trading, whether it be futures, options, swaps, or whatever, it's not suitable for everybody. Make sure you know what you're doing before you do it. We're not offering financial advice. This is simply for informational purposes. And at the end of the day, you have to make your own decisions. And this is unique information provided by Apex Investing. And then the other standard disclaimer: futures, options, swaps, trading involve risk, may not be suitable for every investor, and may result in loss. Any trader decision that you make is your responsibility. The information presented is for informational purposes. Contents are not an offer or solicitation to offer, buy, or sell any particular financial instrument offered by Nadex. Past performance is not indicative of future performance. Okay? All right, so we got that out of the way. And important stuff, though, is to obviously understand that there is risk. Coffee is hot, exactly. So first thing is, if you don't have a Nadex account, just to show you this real quick, I know a lot of y'all already have this done, but just, everybody had to figure this out at one point or another. Hop on over to Nadex.com. Okay, once you go to Nadex.com, to get a demo account, go to trading, and then go down to demo trading platform. Sign up for that. It takes literally, a couple minutes, seconds, really. Just put in your username, first name, last name, phone number, and email address. Everybody should have that done now. It doesn't take any time. So if you're one of the 7% that didn't have a demo yet, hop on over to Nadex.com, demo trading account, fill that in, check your email, you'll get a password, you'll be able to log in, you'll have $25,000 of funny money to play with, and this is actually the best way to learn how to trade. Getting in there, learning how to hit the buttons, learning how to make mistakes where they're free to make is in that demo section, and just how things work in general. So definitely get that going if you don't have that already. Once you got that done, then you can open a live account. Doesn't cost anything to open an account. The minimum funding requirement is currently, I want to say, $100 to fund a live account. Fill in the information. Takes about 5 minutes to go from start to funded. You're obviously probably going to want more than $100 in there, but all you need to open an account is $100. One of the benefits of opening a live account is if you open a live account and you make a live trade, it doesn't matter if you have $100 in your account or $100,000 in your account, whether you place one contract for $10 or 100 contracts for $50, or if you place one live trade in a live funded account, then you will be able to then go in and ask Nadex to extend your demo out, and they'll extend it out for a year for you. Okay, so hey, I've opened funded my live account. Can you please extend my demo? And just email customer service or call them up. Okay, so pretty fast, pretty easy to put all that together, and I recommend that if you haven't done it, go ahead and get that step done as quickly as you can. Okay? All right. So now that we got the basics out of the way, the other thing is some of this is going to be brand new to some of you. Some of you, want to do more. Hop on over to apexinvesting.com. It is free. If you had a demo a year ago, can you get one again? Yeah, just go through the steps I just said. Fund a live account, place a live trade, and then ask them to extend your demo out. You can have them continue to extend that as ideally the whole point is to trade live. If you're going to spend all the time doing it, right? As soon as possible, but just making sure you do it at the right time. But right here on apexinvesting.com, click on Get Free Access. Okay? So click Get Free Access. That'll let you get right into the website. We have information on futures, Forex, binaries, Nadex, spreads. We have free webinars every week, just about every week on Thursday mornings. Lots of trading tools. We show you how to get free Forex charts, free futures charts, and we have a lot of other tools on top of that, trade rooms, and all sorts of other stuff that you can check out. Okay, but again, that's free, and like I said, I'll be showing you some of the stuff in it. But one of those things is a binary scanner, where you can automatically scan all the 5-minute binaries on one page, and even open a ticket right from the scanner to be able to place a trade. So we have tutorials on how to use this. It makes it a lot easier. It looks advanced at first, but it actually makes it a lot easier. And there's a whole section right here just under the scanners on how to go in and learn how to use it for the spreads or the binaries or whatever. And that go into a lot of detail. You don't have to know everything on there to do, any basic trade. It just shows you a lot of the different ways that it can be used. And like I said, it doesn't cost anything, and it makes it a whole lot easier for you to find stuff. Also, over on the homepage, you'll see that we have a whole forum section where you can ask tons of questions. So all the questions you got, want to know how to do certain things, trade management, trade psychology, different strategies, different systems, how to use different indicators, how to use the platform, stuff like that. It's all built in. And we have a whole education section over here, which is very helpful, like where the newest webinars will be located under education, webinar recordings. So like tonight's webinar. And courses that we have available that you can also check out for free. And we also have a news trading plan. This is really going to be one of the most important things for you to make sure you're aware of, is to just know when news is coming out. Okay? Because it can really impact the FX markets. And so we'll be talking about that tonight, but just in case you're wondering where to find it, it's in the menu under News Trading Plan. That's one of the things you're going to want to be aware of every time you go to trade. When is there news? And scheduled government news, because the 5-minute binaries are on FX or Forex, foreign exchange contracts, and it definitely has an impact on FX. And so you want to just be cautious when you're hopping in right around news times. Okay? Pretty basic stuff. All right, so with that covered, tonight we're going to get you on the basics of 5-minute binary contracts. Okay? Talking about, what are some of the best markets, or what are the markets? There's 4 markets to trade. Being aware of news on FX, we talked about that a little bit. Some of the tips and tricks you're going to be aware of, 5-minute binary strategies, and we're going to talk about some good risk management. So 5-minute binary contracts, first question is just what are they? When you log into Nadex, right here, on the top left you'll see 5-minute binaries. And this is a demo account. Over here, if you go to a live account, you'll see it in the same location. Okay? So right here, 5-minute binary contracts. And it shows all 4 of the 5-minute binary contracts. Now, like I said, you can also use the scanner and pull them all up as well. So either one, of course, is your choice. The one benefit of the scanner is it's going to let you see all 4 of the markets at one time, whereas inside the platform, you're going to have to click Aussie dollar, Euro dollar, pound dollar, dollar yen to switch between them. Okay? So it's a big advantage that I like on the scanner, being able to see all 4 of them. So, first of all, they're a binary contract. What is a binary? A binary, the most basic definition, is a true or false statement. Okay? Again, it's a true or false statement. And if you go over here and look at a contract, what do I mean by that? If you held the contract till expiration, which we don't recommend that you do, but if you did hold the contract till expiration, then either you're right or you're wrong. There's no in between. It's a 0 or a 1. And so what does that mean? Well, whatever the max profit is on the trade, you'll make that if you're correct and you hold it to expiration. If you don't hold it to expiration, then you could get out of the trade and you could limit your loss or lock in a profit. Okay? So if I bought a contract, whatever the price I buy a contract for would be the maximum risk of that contract. So if I went over here to, say, Euro dollar, if I bought a contract for $10.50, okay, then, or at this point $11, what would be the risk on that contract? What's the risk if I buy it for $11? If what I buy it for is my risk is how much? I know it's a simple answer, but there we go, $11. Okay. So, if I bought the contract, that would be my risk. Pretty simple. Okay? And let's see, somebody apparently has a problem seeing things. We don't really handle tech support, but I can give you the number to it. Hold on one second. It's either on your computer or go to webinar thing. Give me 1 second. I'll copy and paste something for you. Here you go. Hold on. Sorry for the interruption, everybody. Okay. All right. So whatever I buy it for, that's my risk. $10.50. Pretty simple. What is my profit potential? It's $100 minus my risk. So if I bought it for, if we just stay with the same number of $11, the maximum value of the contract is $100. So 100 minus 11 is $89. There you go. And it'll even show you that inside the ticket. Max loss, $11. Max profit, $89. Right there. Okay? So, all right. So that's the first thing, is to understand that concept. Is just what the risk and what the max reward is. Now, if I go in and I sell a contract, so we'll have some new ones popping up here in just about 20 seconds. If I sell a contract, the price I sell a contract for is my profit potential. Notice before I said the price I buy a binary for is my profit potential. The price I sell, if I go short to sell a binary, then the price I sell at is my profit potential. So what would be my profit potential if I sold a contract for $84.50? You know, how much could I make on a contract that I sell for $84? Yeah, 84, exactly, $84. Or if it's $84.50, $84.50 in profit. Exactly. Okay? So it's just the exact opposite. So my risk, okay, would be $100 less than that. So if I could make $84, let's just say, to make it a nice simple number, $84, $100 minus 84 would be my risk. So my risk, if I sold it for 84, what would be my risk on the trade? $16. There you go. Simple math. Takes a little bit to wrap your head around it the first time when you get the buys and the sells, but once you get that down, it's easy. Also, again, it's on the ticket and it's on the scanner. Again, it'll show you right on the scanner where to find that information, and it actually, like, by every contract, it shows you and calculates for you the risk without having to open a ticket. You can actually see it inside the binary scanner. Okay? All right. So now that you understand that really simple concept of how do you calculate risk and reward, what happens at the end if you hold the contract to expiration? So if we held it till 7:20, by the way, it's always listed in Eastern time. Okay? Well, if I said that the statement was true. The euro dollar would be greater than, 1940 at 7:20. If at 7:20 the settlement value is greater than 1.1940, then I will be profitable on the trade. If it is equal to or less than, I will lose on the trade. Okay, so it has to be greater than if I held to expiration. Now, if I sold and I held to expiration, it had to be equal to or less than the contract. So euro dollar greater than 1.940, if we're going to have the same contract up here. If it was equal to 1.940 or less than that and I sold, then I would get the maximum payout. And the maximum payout, which you see a settlement payout of $100. So let's say you put up $10 in risk, okay? You'd see a payout of $100. That means you made $10 of your risk plus the $90 profit on the trade, okay? So pretty simple. Everybody get those basics so far? Any questions on those basics? Sorry, there's a mic issue over here. If I got any questions, otherwise I'll keep moving. Sounds great. Okay, so everybody's good so far. All right, so the next question is that I see coming up is, so why wouldn't you hold till expiration? Well, because if you held to expiration and it expires just a tenth of a tick above the one that you sold, you lose everything. If you hold till expiration and it expires a tenth of a tick below the one that you bought, full loss. Okay? So basically, don't be greedy. Get in, get out. All right? So, question says, can I buy one price and sell another time frame? I'm not quite sure where you're going. If you're trying to talk about vertical, like calendars or something, but that's not what we're talking about. Like, I could buy this one for 17, and I could, or at this point 29, see how fast they move. And then I could sell it $20 higher. I could buy it for $38.50. I could sell it for $48.50, $58.50. $80. Okay. So to get in and out of a trade, it's pretty simple. I just put a buy on there and hit place order. That goes in, and then so I got in the contract, and then I could put in a exit order, say if I want to get out at, $50. And obviously I'm just randomly doing a demo trade. It doesn't matter right now. So put the order in. Now I have a working order. If the price hits $50, on the bid side, it will get me out of the trade. So real simple. It's just using the little green arrows right there. And if the platform's new to you, one of the first things you're going to want to go do is come over here to our education section on the Nadex tutorials. You may need to zoom out. Just hit Control-0. That'll get your screen back to normal. But under Education, Nadex tutorials, and there is a whole platform section that teaches you how to enter and exit trades if you don't know how to do that. Okay? So, one of the questions comes up. So, what if you plan on buying and getting out of a contract before expiration, then a 5-minute binary might not be the best contract, or is it? Question asked by Jose. I feel it's too rushed to get in and out and then get in and get out. Well, here's the thing. You can wait 30 minutes for it to move $20. You can wait 30 seconds or 10 seconds for it to move $20. How long do you want to wait for it to move? Because here's the difference between a 5-minute binary and an hour and a day and all that is the longer it is till expiration, the slower the contract moves. Okay? 1 tick, 2 ticks can be easily a $10 or $20 profit on a trade. Like net, after bid ask, all that. So a very small move. I mean, we saw a contract I had just a second ago that went from 10 to 40 and back down, right? So they move really, really fast. One of the big reasons, again, Jose, why you're going to want to get in and get out. They move really fast. It can move up a couple ticks. You could buy that thing for $10, $20, lock in, say a $20 profit. Okay, buy for 20, sell $20 higher. You're done. In, out. I mean, 20. You just made 100% return on the trade. Why do you care if it can make 80 when you locked in 20? Because it could go right back up to 40, could drop right back down to 10, and you gave it all back. Okay? So, again, how to get in? Just hit the buy offer side right there. It comes up. Quick place order. Once it went into fill because the price already moved. Right now the price, I said buy at 37. The price is at 40. So it's in working orders. If I want to adjust it to market price, got filled now. So it already got filled before I got back to it. Now I'm in at 37. If I want to get out at 70, I'm just throwing a random number up there at the moment, just teaching you the basics. Okay. Then hit place order. And now that contract is at 70. Okay, so whenever it goes up to 70, then it would automatically get me out of the trade. Okay? So you're trading very small moves in the market will make very large moves in the underlying contract. So instead of having to have a lot of volatility, like there's a lot of times during the day where lunchtime where markets can be very flat, nighttime where markets can be very flat. Okay? You can go in, do short trades, very small trades. I'll get into how to in a second. First, you need to understand what it is and how it moves before you try to figure out when you're going to buy and sell. If you don't understand the contract, how are you going to trade it, right? Doesn't matter what you look at on a chart if you don't understand the contract, okay? So, first let's stay on the basics, and we'll get to some more advanced stuff here in a minute, okay? But anyways, these have become among my favorite contracts. At first, I was like, I don't know. And I've gotten really into the contracts. So first, let's make sure you understand what the contracts are, what's involved, how they work, and then we'll go into some of the ways that we trade them a little bit. And we'll be advancing this over the next 4 weeks. And we have traders like Lori, in our room trading them. I think she made $900 or something today, trading just a few contracts at a time on these, and just trading for a couple hours because they move so fast. She just hops in, scalps, grabs $20, $30, hops out, in and out, just very fast moves. I mean, I can wait an hour for the thing to move if I want to, or I can wait 30 seconds. I'd rather, if it's going to move, let's move. Let's go. So, again, you're going to get that advantage of speed because it has to finish at 0 or 100 at expiration. Okay? So, again, they move very, very fast. The price can change dramatically fast. And that can be an advantage if, you're understanding the concept of, hey, I know it moved from 20 to 40, but I'm not necessarily going to sit there and wait for it to get all the way to 80 or expire in the money. I'm going to get in. I'm going to take my profit. I'm going to get out of the trade. Okay? How many strikes? There's 3 strikes per market, okay, per 5 minutes. They start trading at 6 p.m. in the evening, and they will go all the way until 4 o'clock p.m., really 3:55, the next day, okay? They don't have 5-minute contracts on the end of the hour, at the top of the hour. At least not yet. They may be adding them in, but they don't have them like at, say 7 p.m. They have them up to 6:55, and they start again from 7 to 7:05 just because they already have hourlies and intradays expiring there. But basically every 5 minutes, except for at the top of the hour, like 6:55 to 7, 7:55 to 8, there's a 5-minute contract trading between 6 p.m. and 3:55 p.m. each day. All right? So you can trade them basically day or night, middle of the night, middle of the day, before you go to work, lunchtime, when you come home, before you go to bed. I mean, you could literally around the clock. And you got 12 new sets of 3 contracts coming out every single hour on 4 different markets. So there's a lot of trading opportunities. Some of you who have traded binaries know you're sitting there. Maybe there's just not a binary to trade. You got to wait another hour for new binaries to become available. Now you got new ones every 5 minutes, and they're tight. They're really tight. The strikes are only 3 ticks wide on the euro dollar, pound dollar, and dollar yen. And they're 4 ticks wide on the Aussie. And by what I mean by that is like right here. 1938, 1941, 1935. See how they're very close. There's only 3 ticks difference. Between the Aussie, the pound dollar, same thing. Just 3 ticks difference. So they're very, very close. That makes it where it's a lot easier to get a contract that actually has a price on it for a trade that you're looking for. Okay? So, again, they're Aussie dollar, pound dollar, euro dollar, and dollar yen. Okay? You do want to have some strategies. I know we have a lot of traders that love trading the iron butterflies. I taught those last month. We have some that trade strangles. There's a lot of different strategies we teach. I can tell you that out of all of our advanced traders, like they are like eating these up. They love them, the 5-minute contracts. So it adds another play to your playbook. Maybe some strategies take longer times to play out, and in between you can be trading 5-minute binaries. And but if you're just buying them and holding them to expiration, then you're just asking to get eaten alive. So you need to hop in and you need to get out, because just as fast as they went up, they can go right back down, because only a couple ticks can make a massive difference on the price. I can't stress that enough, okay? Reminder, how news affects the FX markets. When news comes out, there can be some massive moves, unpredictable moves in the market. I can tell you how far it moves on average, but obviously nobody can tell you what direction it's going to go. And so you want to be very careful on your risk right as news is coming out, okay? And again, we list the Forex news, right? We have a news trading plan. We also have an economic calendar with even more news. But basically, the ones to pay attention to that I pay attention to are listed right here on this news trading plan. Okay. All right. So just be aware of the upcoming news. Check that every day. You can even mark it on your chart if you want to. Okay. So a few tips for you. Again, they're very fast-moving instruments, and they can go back and forth really fast, so you can take advantage of that if you'll get in and get out. And some of y'all have the bad habit, or you've traded somewhere else where you couldn't get out before expiration, and so that's how you're used to doing it, and like that habit is not going to help you. Okay? So for the few times that it does work, it's not going to be the one that you really want to depend upon. You want to be able to get in, take a profit, get out of a trade. All you need, is a very small wiggle in the market, and you can see that contract move quite a bit. You do need some sort of system, some sort of strategy to help you out as you're going along the way. And we have some stuff like that we're already teaching our traders, that we're working with our traders on. I'll go over a little bit of that with you today as well. So the first thing is be aware of the contracts, and I'd say be open to them. So up to you, but I mean I've been amazed by them. Just trading in them myself, already looking at them, working with other traders on them, and seeing the results that I'm seeing traders get on them has been pretty cool. Okay, so 5-minute binary strategy. So there's a few different ways you can trade them. You can directionally trade them. Okay, we'll talk about some like advanced, like straddles and condors, things like that later in the month. But you can directionally trade them either just buying a binary or selling a binary. If you buy a binary or sell a binary, you can buy an out of the money, often used for scalping. Okay, but I mean like a tick scalp. At the money, in the money. So what is out of the money, at the money, in the money? If you're new to trading, if you're new to Nadex, what does that mean? Let's find some. And look at these. I mean, they've already moved a ton. So you find some that these have already moved quite a bit. There we go. Okay, so let me take a screenshot before the price changes because they move fast. So I can give you a good example. Okay, so An out-of-the-money contract is where the binary literally had, at least if held to expiration, would have to move in your favor. Either way, it would need to usually, unless there's implied volatility, but need to move in your favor by expiration to be profitable. So like it has to move up. So the Aussie dollar, as of this quote of the screenshot you're seeing right now, the 80.93 contract is quoting at $14. If the risk is less than 50, it's basically an out-of-the-money contract. The market has to move in your favor. Okay? An at-the-money contract is going to be priced somewhere around $50 on the mid price, which is the average of the bid and the offer. And that's what the market's trading at the price. So if the market was trading at 80.89, then you'd see a contract with the mid price of 50. So it may be like, 45 by 55 or 39 by, whatever. It could be whatever the bid offer is in there. But the mid price of the bid and offer can be right at $50. Because there's that 50-50 probability it will expire in the money. Okay? And then if it was in the money, meaning the Aussie dollar is already greater than 80.85, then the risk will be greater than $90. The market doesn't have to move at all. If it's at 80.89 and you bought an 80.85 and it stays above 80.85, stays flat or even moves down but expires above 80.85, you'll be profitable in the trade if you held it to expiration. On 80.93, you either have to close it or it would have to move above 80.93 by expiration and settle there for you to be profitable. So out of the money will have lower risk, okay? Higher profit potential, even though you may not be going, even though it has an $80 profit potential, again, if you buy it for $14, you may get out for a $14 profit or $20 profit, okay? In the money, it's nice because, well, it doesn't have to move, it can stay flat, you can still be profitable, but the risk is higher. So nothing has to happen and you can be profitable. But if it does move against you, then there's higher risk because you have a higher probability trade, okay? So I am looking at these more of what are the best contracts when it comes up. I'm not honestly getting stuck on the idea of pure premium collection on this. There's only 3 ticks between them, okay? I'm not getting stuck even on out of the money or at the money. I'm looking at what contract is the best contract available, and I'm going for that contract, and I'm usually going for $20, $30 in profit and getting out of the trade. I really don't want to stay in the trade until expiration. The dark zone, question comes up about the dark zone, is about a minute, usually at 1 minute before expiration. What we call the dark zone, traders call it at least, that's when they stop quoting, okay? So when they stop making quotes, and you'll see that happen. Yeah, somebody has some random orders in here. But when they'll stop making quotes when there's, actually it's just flown so far down. See how they're all 92. This is a good example. Okay, check this out. Well, they're new contracts. But I mean, they're already at 92. All 3 of them. They've already all moved. Okay, now, nice thing. Here in 2.5 minutes, you're gonna have 3 more contracts, but they move really fast. So you basically pick directional. You get in. You set your take profit immediately to get out. Okay. Question comes up. Without a good strategy, this could wipe you out. Without a good strategy, any system could wipe you out. Any amount of trading could wipe you out. So you need to have proper risk management. You need to have a actual, system for how you're picking your entries and your exits. How do you get real time and not the indicative? Inside of our website, the first course under education says getting started with Apex and Ninja. We show you how to get the platform, the FX data feeds, and the futures data feeds for real time data, not indicative data. So for getting that, that's where you go right there, and we show you how to set that up for free. Okay. Example from, let's see if I can find, I know one of our traders, she was sending over, she actually calls a lot of trades out in our room. She's awesome. She volunteers and helps out a lot. This is like her chart from today. She was doing 5-minute contracts. This is using Ninja with our plugins on it. And this is a strategy we've been testing out actually for the last few weeks. We're going to be releasing it next week publicly. All of our beta and room leaders have it. But this shows basically she's marking up where she sold the 5-minute contract. I mean, when she goes in, she'll sell for 80, buy back for 60, buy for 20, sell back for 40. So sold right here. She got another one. She came in, sold. And look at it. All you need is a couple ticks. Okay, and she's actually just focused on the U.S. yen. You can trade 4 markets. So far, she's just focusing on the U.S. yen. She sold here. She bought a couple others. I mean, literally, you can just see she's just trading in the markets. So. But yeah, this is for Ninja Trader. You can use it to chart. Yes. So, and our plugins work on Ninja, but obviously you place your trade directly through Nadex, or you can use our scanner to open up the ticket in Nadex. So, the data feed is free. The platform is free. Let's see here. But yeah, so you can get the data for the data for free. Let's see here. Questions that are coming up. Let me go back and try to get some of the questions, and then I'll keep going on the PowerPoint. I want to catch up a little bit on some of your questions. Got some good ones in here. Let's see. Hopefully Ronald got everything resolved there. Let's see. Daryl asked, why don't you recommend holding till expiration? Because you are increasing the probability of a loss because you are not locking in a profit. You're being so concerned. And I mean, we've all been there, but you're so worried about getting that final $8 that you end up giving up $20, $30, $40 in profit. It's like base hits, over and over and over and over again. That's what this is about. 5-minute base hits. Just getting as many of those as you can. If you're holding, it'll work, and it won't. I mean, it's going to work, and it's not going to work, and it's just, I want to be out of the trade. I want to take my profit. I want to know I'm flat. I want to find the next trade and be ready for it. I don't want to cost myself, focusing so much on trying to get $5 more out of a trade that I miss out on another trade, say on euro dollar, that I could have taken. Now I could have made, say, $20, $30 more over there, but no, I was waiting for the last $5 over here because I was so focused on this chart. So it's also cost of opportunity, your focus, and the psychology. Walking in a decent profit consistently helps out a lot. I mean, it didn't really matter what binary I trade. I'm not big on holding to expiration. I mean, my trades are in, out, just as quickly as I can. So I want to get in, I want to take my profit, I want to move on. People who hold, I have not seen it work well for them. That's the best I can say, What are the fees? The fees are 90 cents a contract per side, so $1.80, up to 10 contracts. Once you pass 10, the fees cap at $9. So whether you do 10, 20, 50, 100, fees are $9. Okay? Do you have to buy before you sell? Nope. You can buy and sell, or you can sell and then buy. So it's a $100 product. So if you sell it at 84, it can't go any higher than 100, right? You could buy back lower, or you could buy lower and sell higher. If the market's going down, you want to sell. If the market's going up, you want to buy. Okay, first. Now, and the rule is the exact same always. You desire to buy low, sell high. Okay, or sell high, buy low. Exact same rule. The math works out the same. It doesn't matter if you buy at 50 and sell at 80, or sell at 80 and buy back at 50. In both scenarios, $30 profit. Okay. So yeah, so just to close the trade out. And again, I put a limit order in to close it out because it can pop up there and come right back down really quick. You don't want to think that you're going to be fast enough. And honestly, you'll probably, if you're like me, you'll be greedy and you'll want to hold on longer. And then you'll watch that profit evaporate. And when it comes back, you're like, oh, I'll close it, and it's coming back. And don't play the game. Just get in, get done, get out. Okay? Let's see here. If you plan on buying and getting out before... Okay, we got that one. Can you review the best time to get in or get out? That would be exactly how you're using a system. We'd have to go through entire... We're going to do a little bit more of that next week, talking specifically about timing, putting it together. Also, if you want to hop in our room, we're doing them during the day. We're calling them out all day. A lot of times at night as well. They're calling trades out. But, she'll hop in, sell the thing for $80, put an order in to buy it back for $60, and done. So it's more about finding the direction of the market, getting in and just setting a take profit and letting a couple ticks take you there. It's not about trying to ride some big trend, okay? And you can see, look at this. This is 3 ticks of difference. I want you to see the price difference here. If you bought at 60, let's see here, $9. Okay, if it moves 3 ticks, it would go up to $39.50 to sell it. If I bought that right now and the pound dollar moved 3 ticks up, then I'd basically be making, at this point, almost $40, $35 on the trade. Bought at 9, sold at 45, because if it moves 3 ticks, then that would be the price of the binary. Just a 3-tick move. Okay? If I sold this thing, if I sold it at 90, moved down 3 ticks, I could buy it back at 62. That's a $10 risk, making a $30 profit on a 3-tick move without a stop loss. Okay? So, you just need a few ticks. Sometimes you only need 1 or 2 ticks. Okay? So, but you do need some sort of, consistent method, not just I'm feeling it, but a consistent method that you use. Like I said, we use Trend Catcher with diagnostic bars. It makes it really clean versus using time-based bars. Because, it's 5 minutes. What kind of time-based are you going to use? We're playing with some second stuff as well. But, basically every time the market moves, in this case, just 3 ticks, a new bar is formed. And so it helps us really see the charts. And these little ranges are how far the usual expectation of movement is during that 5 minutes. It's like, okay, it went short. It's as far as I expect it to move. I'm done. It flipped. It went long. We got wins. There's losses, take profits. There's, it's all in there. Let's see here. So after the 5 minutes are up, do I still own it? It's a contract. You're basically making a contract that I'll pay this much, and if it's above this by this price, then you pay me this much, and if not, then you keep my money. Okay? Again, that's why I don't like holding to expiration. After the 5 minutes are up, it settles, and you'll see the money either, if it's profitable, you'll see money come into your account. If it's not, then you won't see a change in your balance because it comes out immediately. For instance, if I go up here and I buy this $10 contract, then you'll see that 80 right there will go down to 70 or with the fee $69.95. Okay. So, or if I bought this at say 53, and again I'm just placing random orders in demo here. I come back over here and I close it. As soon as I close the contract, let's see here. We're not in that one yet, are we? Not yet. Okay, so let's edit it and get it in. It's moving up on us already. We put an order to buy it at 53.50, and look how fast it moved. It was already up at 61. So if I want to edit the order, I can amend the order, get in the trade when it comes out, and then if I close this contract, then what it'll do is it'll put that remaining $35 back into my account. It'll go up there. Money goes back in. It's pretty simple. The money comes out. Basically, you put up the full collateral. So if there's a $20 risk, you're putting up $20. If there's an $80 risk, you're putting up $80. Per contract. Paul asked, what are the benefits of trading the 5-minute binaries? For me, it's actually the speed of the trades. I'll go in and I can literally trade for 10 minutes, an hour. I can, I'm helping out with trading rooms. I'm overseeing our software developers. I do a radio show. I do webinars. I have a family, kids, wife. I can't always trade 8 hours, 6 hours, 4 hours a day. A lot of y'all can't. You got a 9 to 5 job. You come home, you got kids, spouse, whatever. You're tired. You don't want to trade all day. Every 5 minutes, new contracts are up. You can sit down and trade for 10 minutes, 30 minutes, an hour. My wife, she is fortunate enough. She stays at home. She takes care of the kids. Got a 2-year-old, got an 8-year-old. She's running them all over the place. She's one that trades. She's like, well, and I'm like, yeah, you should. I actually told my wife, I'm like, hey, focus on the 5-minute binary contracts because you can sit down for an hour when everybody's away and you can trade. And basically the advantage is you can sit down for a finite amount of time with a product that will have volatility even if the market doesn't have volatility. You don't have to wait for the market the S&P to move 6 points. Okay, a couple ticks could make you $50, right? So to me, that's the big advantage is you can use a very small amount of time and get a lot of volatility in a very small amount of movement. Let's see here. The scalping, it is scalping in the sense of you're getting in and getting out quickly, but doubling your risk is not necessarily always scalping. You can actually do more than double your risk if you want to. If you want to go and buy at 10 and sell at 30 or whatever your choice is. But it is faster trading. So, which, again, now you don't have to sit there for 4 hours waiting on the market to actually move. It just moves a couple ticks. It oscillates all night long. Right? Let's see. Mike asked, I find it hard to get the right risk reward for a consistent profit. What price do you normally play? I wish there was a super easy answer for you on that, Mike. The biggest thing is taking profits and having a high probability on these types of contracts. So when I'm trading futures, I'm going for a much higher reward than risk. When I'm trading Forex, same thing. When I'm trading on a binary contract like this, I'm going in. Either I'm buying in the money, which means I have a higher probability and I'm grabbing that profit on just a couple tick movement, or I'm buying like an at the money or out of the money. If I see enough movement going on, I'll buy that out of the money for like 20 or 30 bucks. But I'm getting in and getting out. I'm going for high probability more than anything. Hope that helps out a little bit. But yeah, if you hop over in our pit mic, you'll see that the trades they're placing and how it works. What are your thoughts on using deep in the money expiration premium collection strategies with as little time as possible? Buying for 90. It will work until it doesn't, and that's obvious. But like when one trade will wipe out all of your profits. If you're buying at 90 bucks, the most you can make is 10. You make less than that after fees, and you're going to lose $90 in one trade. So you may hit a string of winners for weeks, and in 2 days you could wipe out all 3 weeks. So I'm not a big fan of that one. Let's see. Since it moves so fast, it's a good idea to place an order at a certain price. I usually place it a few ticks above, so like if it's at 25, I may place it at 30 just so I can get in. As soon as I'm in, then immediately I'm going to set my take profit order in Tammy. So yeah, so I'll usually put it a few ticks above the market whenever I'm looking at doing a trade. So if I was going over here and let's say I was going to buy this at 10, then I may, say, oh, I'll buy, 15 and hit it. So that way if I go hit it and it turns to 11, okay, or 11.50, hey, I got filled at 10.50, not bad. It was at 10, I put it in at 11, I got filled at 10.50 on its way up, and give up a little bit there, but that way I can get in the trade versus I'm chasing it, and the thing went from 10 to 20, and now it's too late to take the trade. Great question. Will Nadex offer stocks to trade? Probably not, because they're regulated by the CFTC, the Commodity Future Trading Commission. The SEC regulates stocks. So what there is out there on stocks that I've seen that's in the works, I'm not real impressed by it that's coming out, but it's not coming from Nadex. They're only doing futures and Forex. That is actually who they're regulated by. If they, file some other stuff in the future, that's possible, but honestly, you don't need more than 16 instruments, or 20, 23 now, I guess, instruments to trade. That will keep you busy enough. What is the difference between the Nadex platform and Ninja? Nadex is the platform where the orders are placed for the binary or spread orders on the Nadex exchange, where you enter and exit an order. Ninja is a charting platform that plugs into futures, stocks, and Forex brokers and data feeds, so you can chart, like charts I was showing you earlier. If you want to pull up a chart and look at it, and add specific indicators, different bar types, more advanced trading. If you want to use like systems like what I talk about, like using like trend catchers or apex patterns, things like that, then that would be where Ninja Trader would come into play for you. Okay. So one you're using to make your decisions, the other one's where you're placing your order. Maybe the simplest way for me to put it for you. Well, lots of good questions. Like I said, we'll be digging deeper and deeper into this as we go by. Throughout the month here. Let's see. Where do you find the 5 minutes on the scanner? That's a great question. Just open up the scanner. Go to scanners. Go to binary scanner. Out of window just drops the menu. Okay. And what I do is I literally set the time frame right here. 0 to 5 minutes. It's like right there, because if you're only going for 5 minutes. And then just choose the 4 markets you want. Aussie, Euro, Pound, and US Yen are the only 4 markets that are currently available in 5-minute contracts. Don't need to do anything else. You can reset your filters if you want to. Bring that back down to 5 minutes. They're right there. There's all the 5-minute contracts available on Nadex right now. And you can click the button to open it up. You can choose demo or live right there. You can make your default 1, 10, whatever number you want to use, and place your orders from there. You can even manage your current open positions directly from the scanner. Right there, you click that if you want to place an order to take profit on this one at 20 bucks. Put the order in there, and then that'll become a working order. And you'll see that over in the Nadex platform as well. There's the $20 order. Okay? It just ties in between the browsers. Do you prefer the 5-minute binaries for Forex for the indices like the US 500? The 5-minute binaries are not available on the US indices. The 20-minute binaries are. And I like those for the iron butterflies as well. Those are, or the strangles. Like I showed before, you can go into the, if the volume's really high, look for strangles. If it's really low, look for butterflies. That's in the recent webinars from last month. For directional trading, I love having new contracts every 5 minutes. So, and those are currently only on the FX pairs. What do you do if your chosen direction goes wrong? You lose. Sorry, but I mean expect to lose. You know, trading has cost. I mean, an ice cream truck guy doesn't just sell ice cream; he has to go buy it. He has an expense. Losses are part of your expense of trading. Just make sure that, ideally, in the end, your profits exceed your losses. So that's also the benefit of having a capped risk contract. Let's see here. What else we got? There's some great questions. The maximum number of contracts. I usually don't out-trade whatever they're quoting. And I do have a recommendation for everybody listening. If you want to see the market maker increase the bid offer size, meaning more contracts available on these 4 FX pairs, then let Nadex know. They need to know what you want, what the demand is. So if you'll email customer service at nadex.com and let them know that you want the bid offer size to be larger than it currently is, that you want it to be at 100 contracts or 200 contracts, then, I mean, the more people that tell them, the more likely they are to do it. So as we can see, I mean, the size may be 10, maybe 30 contracts. You know, I want it to get up to be 500 personally. So popped it up there to 30. So now if I take out all 30, 30 more will come back. Okay? Fairly fast as well. So just as an example, again, I'm just doing this on demo. So don't be following trades. People go in and do every trade I put on here. And I want to make sure you know I'm doing demo. I'll tell you if I'm doing live. But if I go in and take out all 30 contracts, so it'll go away. But then give it a few seconds. Takes about 30 seconds to a minute. Boom, there we go. 30 more are back. Okay? So I can get in. If I want to get into 90 and get out, just understand that there will be a lag between them refilling the book. But I want this book larger. You probably want that book, that size, larger. If you do, let Nadex know. Okay? The more people that tell them, the more likely they are to increase that size. They know that this is high demand. Okay? Is it easy to get out in live markets? Yes. I've had no issue getting out in live markets, personally. And neither does any of our other traders that I've heard from at all. Do I use 3-tick diagnostic bars to trade them directionally? I do. I also use the trend catcher with it. So if you watch Lori in the pit, she'll show you her chart setup. Like that chart I showed earlier, that was actually her from trades that she did today. And I mean, she made like $900 something doing just 3 at a time, going for $20 to $30 profit trades, trading for a couple hours. So not trying to make any kind of implied whatever is going to happen tomorrow. I'm just saying, go in, follow her, demo trade with her, see how it goes. Okay, just learn how to trade them. For taking profit, I don't use anything but just a regular limit order to take profit. So if I buy at 20, I set a take profit at 40. I'm not waiting on a price because a tick or two, I mean, the indicative may not even move that much, right? But you know how sensitive binaries are, Kevin, are in those last few minutes, because I know you're very aware of it. They're really sensitive. Just a couple ticks can make all the difference. So I use a limit order, and which is basically just means the same order I showed you earlier, where you get in, put it in your price, and set it higher. Like if you bought at 20 and sell at 40, that's a limit order. Limit means I'll sell at this price, but not any lower. And so it'll have to get to 40 before it gets filled, or you can edit it if you want to change it. Let's see here again. To put in a limit order, I mean, let's say I wanted to buy this at, I'm just going to make up an example. I want to buy it at 40. Okay, that's below where the market's at right now. And I hit place order. That's going to become a limit order. I'll buy it at 40, but I won't buy it for $1 more. So it's going to sit there until the price drops down to 40. Or if the contract expires, that order will just drop off. So limit order is where you are buying below where the binary is currently quoting, or you're selling above where the binary is quoting. Okay? By the way, look at that. That thing was at 70, and now it's all the way down to 20. $50 in like 10 seconds. Okay? So these things fly. So just a nice example there. But yeah, big old nice thing about demo. But you go in here and I can set it back up and I can say, okay, well, get me out of this if it gets back up to 50. If it moves a few ticks back the other way, awesome. Okay? But if you want to see these live, like I said, we'll do them over in the room and all that. Let's see here. You're saying place a limit order. You're meaning the stop. No, I'm just saying it just a limit order. A limit order means I'm putting a sell at the binary above the market or a buy of the binary price that's below where the binary is currently quoting. Okay? Let's see here. And what else we got? Do you prefer in these trades out of the money, at the money, in the money? I personally prefer them out of the money. That's how I like to do them, but I know, like, John, he'll do them in the money. Lori, I think she does a lot of out of the money, maybe close to at the money, but most of them are out of the money. So you're going to find out real quick what you like doing, but I mean, the more comfortable you get, the more comfortable you'll be within the monies. I like putting up $20, not worried about it, and setting a take profit at 40. So, is it best to trade in volatility or non-volatile markets? It doesn't matter. You only need a few ticks. So, I mean, ideally you want it where it's moving a little bit. The more it's moving, the more trades you're going to get. But it doesn't have to be. There's only a few ticks between the strikes. I mean, only a couple ticks can make a massive difference in the actual contract. Let's see. Trying to look. Let's see. Mike had a question. If I can find that one. Let's see. If you get out taking 10 and 20 and lose 50. Oh yeah, I mean, I wouldn't want to buy at 50 and get out at 70. So I mean, you could do that, but like I said, I like out of the money. So I usually buy at 20, sell at 40. So, and I guess you can argue with it, but you can look at the trade results. They would say differently. Let's see. We got the limit order down, I think. Are you using the diagnostic bars for trades? I'm using smaller sizes for these. I'm using 3 ticks. Let's see here. The expected ranges, just right click the indicator, add the expected range to your chart. It's right up here, expected range. And then I changed it to 5 for 5 minutes. And it's not that I even need the expected range so much for this trade. I'm not using it a whole lot. I like seeing the visual representation of 5 minutes have passed. That's why I like the 5 minutes on there. It's like that was a 5-minute period, that's a 5-minute period, that's a 5-minute period. It helps you see the 5 minutes. So that's what I use them for. Seems like the indicative can move faster, or when I don't even see the underlying move. You're probably looking at the underlying last, Robert, on your chart in Ninja, and the indicative is based on the live mid price of the bid and offer. So as the bid and offer, meaning the price that hasn't been filled yet, is changing on the FX pair, it's averaging the mid price of the bid and the offer as the bid and the offer are fluctuating. So there may not have been another trade because most likely your chart is charting the last trade placed, but the bid and offer can still be moving. Basically, it's adjusting, trying to find orders. What I look for in getting into a trade is I'm looking at the trend catcher like going short and the diagnostic bars closing in the same direction. That's the simplest summary I can give you. So like when this goes short, goes in that direction, I go short, sell it for $80, buy it back. And I mean, it didn't move that far. It only moved a few ticks, but I only need a few ticks. So that's one of the many strategies. Like I said, we're going to go over a bunch of these this month. I just want to make sure everybody has all the basics down before we dive in to it. But yes, I trade the 5-minute binaries, like I said, using the trend catcher and the diagnostic bars. Let's see here. What's recommended? Nadex Pro or the web platform? Well, I'm going to say the scanner. But Pro is fast, but it has a lot of stuff, and it's one of those things you want to scale into. When I say advanced, I mean it's really advanced, and advanced can be good or bad. Depends on if you need it. On 5-minute binary contracts, I don't know how much advanced you need. All right? I mean, it's just there's only a couple contracts you're choosing from. So usually only 1 or 2 that's even an option for you whenever it comes up. So, I just use the scanner and let it pop them up for me. Joe, can you give me a reference for placing a stop on a binary on Nadex? Is it just as easy as buying a sell and selling a buy, and how to determine a price to buy and sell? That's a really mixed question. Sorry, Joe. I'm going to buy. I want to buy, and I want to put a sell higher. I want to sell, I want to put a buy lower. Not exactly sure exactly what you're asking. But if you want to hop over to our site and ask on the chat box, bottom right corner, then I bet one of our guys can help you out to figure out exactly what you're looking for. Okay? Let's see. I need to understand something in Forex. I can make money whether the price goes up or down. That is correct. Forex, Nadex, future stocks, options, whatever. But on the platform, I only see symbol with no less than symbol. Why is that? Okay, great question. So if you see a greater than symbol, okay, we've got to reload some. Come on, it'll log me out. Okay, so why do I not see a less than symbol? Because when you're buying, you're saying a true or false statement. Okay? Oh, we don't have any because we're in the end of the 5 minute. But end of the hour, remember I said like 75 to 8? Those last 5 minutes, there's no 5 minute contract because you have the hourlies trading. So you can just choose the 6 to 8s. But anyway, so the question about why is there no less than symbol? When you buy, then you're saying it will be greater than. You're expecting a rise in that underlying market. When you sell, you're saying false. You're saying not greater than. So you're actually, in essence, when you sell, you're inverting that greater than to a less than equal to symbol. So buy is saying true, it will go up. Sell is saying false, it won't be greater than, it'll be less than or equal to. So the sell is how you get that less than or equal to. It's just not printed on there. It's just buy means up, true. Bid or sell means false, down, will not be greater than, will be less than or equal to. I hope that helps out, Williams, on what you're asking right there. But very, very good question. Let's see here. Yeah, we have trials for our trading rooms. You can check it out. No problem. Do you like out of the money strangle strategies as opposed to directional trades and the 5 minute options? Not so much. I would much rather just trade directionally. Because otherwise, if it expires in the center, but like if I buy a 20 and I sell an 80, I'm risking $40. The thing has to move quite a bit now because I have to cover my $20 risk plus make 40. So I have to make $60 for the thing to move for me to be at a 1-to-1 on the trade. Okay, if it expires in the center, I lose all 40. I mean, if it did expire above or below one of them, great, I make $60. You don't want to risk a 40 net, but I do not prefer out of the money strangles. I will be talking a little bit more about those later in the month and some of the goods and bads and ways to look at them and using volume to help you maybe make that decision. But that's not my preferred strategy. My preferred strategy is directional, but I will be talking about later when I want to say like in the third week, I'm going to do advanced strategies. I'm going to talk about like butterflies and out of the monies and ways that you might be able to look at potentially trading those on the 5 minutes. But my preference, honestly, is just directional. Let's see here. Myron Poach, just to confirm what Daryl was saying, my brother-in-law blew an account out holding till expiration. So, yeah, do not hold. So it's not worth the $5 or $10. Okay, if you ask a stock trader, if 12 times an hour you had the potential to buy a stock for $10 and sell it at 20, would you be happy? You'd be ecstatic. I mean, a stock doubling, going from 20 to 40, or 40 to 80, or 10 to 20, who cares? It doubled. Why do you need the last $10? So, especially if it could go from 20 to 40 and then right back down to 0. So it's so important. You'll believe me sooner or later. So, can you go over bid offer real quick? Yeah, bid is sell, offer is buy. So people are offering, like, I can get really complex on it, but basically an offer is the price that you're buying at. Okay, so you're willing to take someone's offer. They're basically offering to sell it to you for $34. So if they're selling to you, you're buying from them. I know that sounds really complex. And then, or they're bidding for somebody to buy it from them for $25, meaning they're basically selling it to you, you're buying it from them. But the simplest way to explain it is the right side is buy, the left side is sell. Offer means buy, left side bid means sell. That's the easiest way to go over it. So if you want to buy, you're clicking on this side. You're not going to be able to buy at the bid. You're not going to be able to sell at the offer unless you're a market maker. Okay, which is a whole big different topic. But yeah, So right side buy, left side sell. So if you're clicking at 21, if you're going here and you're trying to buy, you're trying to get this price over here because you want to buy it lower, well, it's going to go into working orders until that price gets filled. So buy right side, sell left side. And by the way, you can also click here inside the ticket to update the price. All right, just make sure you pay attention because if I click 22.50, notice how it went to sell. Okay? Good question. What's the reason for only having 3 strikes? I think part of it is they just launched them. So they got to see the demand to add on more strikes, because more strikes mean more risk for whoever's making that market, right? Because they're quoting them and they're only going to be worth $5 or something. But they're quoting them, but people take a whole bunch and there's a massive move, then they can get hung because they can't get rid of them. So a few strikes allows them to manage their risk better. Most of the time throughout the day, that's enough. So I personally would like to see 9 strikes. So that is what I'll be pushing for. First, I want to see 100 plus bid and offer size on the 5 minutes, and then I'd like to see 9 strikes. But most of the time, you'll never even get to much beyond the upper or lower one. Just when it moves real fast. So that's the rarity where you'll see that happen. And it's basically the average volatility of 5 minutes is that range of 6 ticks. So 3 above, 3 below. How do you get the bid offer smaller? Get more traders on trading. More traders trading, more market makers come on, more market makers come on. They compete, they stumble over each other, and bid offers get smaller. But they are options. Always remember that they are options. Options have wider bid offer spreads, but they move fast. I don't care if I have a $10 bid offer spread if the thing can move $30 in 2 ticks. Okay? Don't get hung up on that. Okay, so we covered how to set that take profit. Just, like I said, enter a trade. If I buy this one for $45, it's in, click the green button. Say I want to sell it for $65. Hit place order. Now my take profit's there. If the market moves up to $65, then it will automatically fill my order. Okay? How to get the Ninja platform again. Can you show that real quick? Yes. Let's see here. Where did that chart go? Or that screen? Once you log into the free members area, just enter education. And then the very first course, enter summary of courses. The very first. It takes 30 minutes. You'll be set up with a live data feed, Forex, futures, and platform for free. So just take 30 minutes, watch all the videos. Don't skip any of the steps, or you'll end up spending 4 hours trying to figure out what you missed. Just walk through it, 30 minutes, you'll be set up. Okay? Without trend catcher, what else do you like? I only use the trend catcher on the 5 minutes. So I mean, if it's not broke, don't fix it. Yep, Apex bars, you got it. Let's see here. We'll be talking about that, Aaron. If you're on the Thursday webinar or next Monday's webinar, we'll be talking more about the trend catcher stuff. I just wanted to, we got to build over the 4 weeks because 5 minute binaries are new to a lot of people. 5 minute binaries are very new. So I just want to get all the, it's funny how many times I'm saying some of these things, but things like get out of the trade. Wanted to cover those first, and then we'll build on top of it. Let's see here. And we'll go through the charts in detail and all that stuff. And if you're in the room, Lori will explain it to you as well, Doug. It's not released, but it's actually displaying inside the room, Claire. So if you hop in there, charts are being shared that are up. Let's see here. Harold says that they move so fast, out of the money seems like the safest option. Am I wrong? Personally, that's why I like the out of the money, because they move so fast. I'm just more comfortable with it. I'd much rather put up $300, buying, $20, $15 contracts and putting up $300, going in and buying, several, $70 contracts, like 4, $70 contracts, $75 contracts, whatever. So, and I'm pretty much going to make about the same amount of money either way. So, see. Joe, limit order, you got it? Cool. All right. Are there some markets that are better at night? That's a great question. I like them all on these 5 minutes. That's probably honestly one of the biggest things I like about the 5 minutes. It really, unless the market's just dead flat. I mean, like not moving a tick. Like the first hour, like between 6 and 7, is usually like just blah. But by 7:30, 8 o'clock, it starts picking up usually. I mean, EU, GU, UJ. I mean, pound dollar. Like John will be up here. I'll be calling trades out. We'll just be going. So really, all 4 of them. We'll be talking more about nighttime as well next week. But I mean, they, as long as you have something that's helping you, pick that direction and everything else with the volume and all that, then works well. Quick summary: going out of the money, in the money, at the money. Out of the money is okay. One summary is the risk is less than $50. Okay. In the money, the risk will be greater than $50. At the money, the market is trading at the same price as the strike. So that's one summary. Another summary is an out of the money contract. The market has to move in your favor for you to be profitable. And there's besides implied volatility, but without getting complex, the market has to move in your favor for an out of the money contract to become profitable at any time. Okay? And at the money, the market just needs to expire like in the money, like maybe a tick in the money, and you're good. Okay? And it gives you more of a 1-to-1 max risk to max loss if held to expiration. In the money, the risk is higher, but the market can stay flat. It can move for you. It can even move slightly against you, and you can still be profitable. But your risk reward is not near as good. So your probability is better because less has to happen. Like nothing can happen, and you can be profitable. But your risk is higher. So, and these move so fast, it's really hard to try to hop out of these. I mean, because they'll go from 70 to 20 in a heartbeat. So it's very difficult to try to manage them like I would when I teach normal premium collection where we're like 10, 15, 20 minutes out. That's a lot different than when you got minutes left on a trade. Let's see. Should I be using a scanner with take profit to get out of the 5-minute binaries? It's, well, it seems slow on the Nadex platform to use it. Yeah, what you want to do is you want to put your take profit in as soon as you get in the trade. Okay? So as soon as you get in the trade, you want to put your take profit order in. Can you copy trades that other people are doing in the rooms? You can do whatever you want to, but it's your own, like for your own account, obviously. And obviously we don't make any recommendations. You're welcome to do whatever you want to do. So other traders are just sharing their ideas. You're welcome to follow them or not. Obviously, it's your money. You have to make that decision. But yes, obviously, a lot of people do. Hopefully, you end up becoming somebody that comes in and helps out. So, I don't understand when you say you're in at 20 and out at 4. You only see higher prices. Let me pull a demo up so I don't hit the wrong button. Let's see here. This means I'm buying a contract that's at 20 and I'm getting out of it when it's at 40. I won't hit the button yet. I'll just pull it up over here. So if I go here to Aussie dollar, there's one for $10. I could buy it for 10. I could sell it for 20. Okay. There's one for 8. They just opened up. There's one for 20. I could buy that one at 20. I could sell it higher at 40 if the market moves in my favor. Let's see here. No problem. Start with the vertical lines. This is Ninja Trader, which is free. The data feeds for those underlyings, we show you how to get those for free. And then the plugins are optional trials that you can try out. But if you hop over onto Apex and click on the right thing, the chat person will help you out on. I don't really try to go into sell stuff on the webinars. I just want to educate and inform here. There's enough sales pitches out there to get some good education. So Chris, diagnostic bars, and then ask. I would probably ask Lori over in the pit, or ask John over on the chat section to help you out. Okay. Will they add more pairs? I hope so, but first I hope they add more. I would rather have more size and then more pairs. That makes sense. Like I'd rather them have like 100 or 200 contracts quoting on bid and offer size, and then add in more. So I want more size first, then more pairs. So because then more people can trade it together easier. So, but yeah, I think the more successful they are, the people that trade them, there'd be no reason why they would not add more. Let's see here. Do you in essence create an out-of-the-money contract by limit ordering the at-the-money for 20? No, I'll actually, while it's at 20, I'll buy it at 20. So it'll be out of the money. If it gets to at-the-money, then obviously I'd be able to sell it back for 40 or higher. Yeah, see, those all just flipped around there. So no, I mean, like, if it's at, like, right now, if I think the market's going up or down, I'm going to, buy or sell it. So right now the market's chilling out. At the moment, we got a down close right here on an up close trend catcher. So I'm going to wait. But if that trend catcher flips to go short, then I'm going to be looking to, go short. And this is on dollar yen, for instance. Just wait for this green line to turn red. Is the volume set by the spot market? I'm not quite sure which volume we're referring to. On our expected volume indicator, we actually read the futures market. We automatically pull from 6E for like euro dollar, from 6J for US yen. The volume on Nadex would be set by traders and market makers. Nadex isn't trading against you. They're just facilitating buy and sell transactions. Let's see here. Larry, as a beginner of binary options, what are some of the easiest ways to start trading Nadex? I honestly would say the 5-minute binary contracts. One of the hardest parts I've seen, and I've trained thousands of traders on Nadex, and the more opportunities you get to trade, the more you learn, the faster you learn. If you're sitting there waiting for an hour to take 2 trades, in a week, you've had 10 opportunities to learn. With this, 12 opportunities an hour, times 4 different markets, 48 opportunities an hour. So, I mean, obviously, demo trade first. Just don't, where do you want to be in 12 months, not where do you want to be in 2 weeks, right? Demo trade, get it down, hop in, help you out. But that's actually where I would definitely start. So we're actually reformatting a lot of our website to tell people that, hey, check out, these contracts, and we're going to put up a whole bunch of stuff over the next couple weeks focusing on the 5-minute binary, because I think it's one of the fastest and easiest ways to learn how to trade on the binary contracts. Let's see here. How close do you set your stop loss? I'm using out-of-the-money contracts on a lot of these, so I'm not even using a stop loss. So if I'm buying for $20 and I'm going for $20 profit, I don't need a stop, right? So if it goes against me and go against me, it comes back, I'm profitable. These move so fast, it's pretty impossible to set a stop. One tick out of the money on you. They're in the money, go one tick out of the money. And so far, most of these trades I've been in, I've stuck, I've went for the profit. Now, if it's close to expiration, if we're like 30 seconds or whatever, and they've come down to 30 seconds. They were at a minute, and they're down to 30 seconds now, usually on dark zone. But I like to be out. If I'm in that last minute, then I'm entering into that dark zone that's going to start up in the last 30 seconds, then I usually look at, getting out of it. If I'm not up already. But when you buy at 10 and sell at 20, is that an automatic profit, or does it have to wait the 5 minute for the contract to be over? If I buy at 10 and the market moves to, if I bought on the offer at 10 and the market moved to a bid at 20, I'd be out of the trade. The $10 would be in your profit, in your pocket. When you close it, you don't have to wait. You may end up doing the same trade 4 times in 5 minutes. It could just oscillate up and down. So you don't have to wait for the 5 minutes. As soon as you close the trade, then the net P&L, whatever that is put back into your account. When you're doing it out of the money and you can't buy it at 20, what would be the most? Okay, so understand clear. I'm not saying that 20 is this hard and fast rule. The reality in trading is markets are alive and they're moving. They're not static. They don't just sit there, right? So 20 is basically saying a baseline. I may get it for 15. I may get it for 30. I'm just looking to get in and get out with, somewhere between a $20 and $30 profit on most of my trades. So, I mean, it's going to vary just based on what the price is. If I always wait for 20, I could miss out on a lot of the trades. So, sometimes I may get better than 20. I may like at the monies. I mean, that's why I said demo trade it. You'll find out really fast, but be a little bit flexible with the market. Don't try to force it into an exact price. Okay. There's the max. There is no max on binary positions as far as I know. When you say is the max, I'm not quite sure what you mean by the max. Like how many can you hold? But if we go over here and we look at markets and we look at Forex and we go down to contract specs, look at binaries, and position limit, none. They do have to report to the CFTC if you surpass 12,500 contracts holding in a day open. Okay? So that would be impressive. But there's not a position limit of how many you're allowed to get into. When you get to the 12,000 mark, let me know. Let's see, what you're doing out of the money, you can't buy it at 20. What will be the most? Okay, so we got that, yeah. So you might be able to buy it at 15, 20, 25, 30. The spread between the bid and the offer. The spread between the bid and the offer, that is a market maker is basically what they're taking on the risk, and they're saying they're making a bid offer by like 25 by 35. Okay, so sell at 25, buy at 35 for somebody else. What they're hoping is that somebody will sell it for 25, which means they buy it from them at 25. Okay, so let's say Robert, you sold, like you went in, you said, hey, I want to sell at 25. So I say, okay, I'll buy it from you at 25. I'm the market maker. I'm not, but for this instance. And then John over here is like, well, I want to buy at 35. So great. So I bought from you because you sold it to me at 25. And then I sold it to John because he bought it from me at 35. So they're making that bid offer spread. Okay? That's how they make money. Is by making that market, by ensuring, they're called liquidity providers, by ensuring that there is liquidity in the market. So that way you can get out of a trade. Okay? If the market's moving fast or there's not a lot of other traders going, that bid offer spread can get a little wider because they don't want to trade against you. When you're going short, they don't want to go long. They want to fill your order and give it to somebody else. So there's actually an article over in our forum section where I talk about exactly how market makers work. And they have 3 market makers now with Nadex, which is good. Can you incorporate our stuff into FXCM charts? I'm not a big fan of FXCM. The brokers can't see a lot of stuff. I'm not thinking FXCM. I'm thinking MetaTrader. But no, they are unique. Now, you can trade on anything. But they are built. Most other platforms can't do what Ninja can do. We can do anything we can think of, literally. So, to keep costs down, we focus on one platform that's free. And that works with futures as well. Because remember, we use futures data on our volume. Even on our FX, we'll use, like I said, 6E on euro dollar. So it wouldn't help us on FXCM. But they're a great company. If you like Forex, FXCM is where we send most of our traders. So, or if you like to hedge your FX trades with Nadex spreads, that's great. Lynn, I have multiple screens. So I recommend, if possible, that you have at least 2 screens. Most computers will allow you to hook up another screen, like either through a port in the back, or you can get what's called a USB adapter. And it just makes it a lot easier to have your charts on one side, any other information you have on the other side. Most traders, they start at 1, and they realize real quick they want to have 2. And then eventually, when you get to 4, that's when you feel like you actually don't have to flip screens every 5 seconds. So it can cost you a lot of money flipping back and forth, a lot more than a monitor cost. So I recommend, if you can, to grab a second monitor. It just makes, in my opinion, and I think most would agree, makes it a lot easier to have at least 2 monitors. So there's not a stop loss on a binary, but you can get out of the binary before expiration to limit a loss. Well, the question was, are there any losses on binaries? You can't actually get out of it. Let's see here. Harold will be actually releasing that on Monday. Or you can see it inside the trading pit. Um, I'm constantly trading. I'm not like only getting in on great question. Do I get in like right at the 5-minute opens, or how late do I let it go? I mean, I may get in, 5 minutes before, 4 minutes before, 2 minutes before. If it gets really close, if I'm doing out of the monies, I'm not as concerned about it. Right? It's when you get in the monies that you get really concerned about the dark zone. If I'm risking $20, I can live with that. If I'm risking 80, especially, I trade 20, 30, 50, 80 contracts at a time. Okay, on different trades that I do. So I get a little bit nervous about in the money contracts that close. But when I got in when they were expensive, but if they're out of the monies, I'm not as worried. But I'll just trade them. If there's not a contract, I'll just sit back and I know there's going to be more contracts in another minute or two. If nothing's there. If there's only 3 minutes left, would I still trade? Yes. So could you trade these starting with $600? First, start with demo, make money in demo, and then, if you're comfortable, then move to live. But you're only, you could be risking $10, $20, $30 a contract. So, yes, you could, but I can't obviously give any kind of advice. My first advice is make sure you can do it in demo first. I want you to last, right? Survival is the first rule. Survive, then thrive. Let's see here. I think I got. That was a lot of questions. Some great questions. A couple more tips for you. Never take a trade just due to the low risk. In other words, don't go, it's $10, so I'm taking that one. Have some sort of system telling you, I think the market's going up, or I think the market's going down. Like on this, I'm looking. It's moving really slow. I'm really looking for the trend catcher to flip to go short with the apex, down close bar. Then I'll go short. So, over here. Apex, APEX, and I'm at what's called a 1 deviation, which is the expected movement of a day. And I got a short trend catcher, and the bars are closing down. Yeah, I like that trade. And I'll just follow them along and along and along. So, price and probability. Price is the percent of probability at expiration. Okay? So, a $20 contract means there's a 20% probability it'll expire in the money. Hence why I like to get out before then. Okay? On the same token, people go, well, an $80 contract means there's an 80% probability of expiring the money. Well, yes, that's the probability model. But it doesn't mean it won't go against you 26 before it comes back. Okay? It means at expiration. It doesn't mean in between. So, that probability of touching goes up. Okay? From simply expiring. So that's why I would get in at 20, 25, get out, 40, 45, 50. Big tip, know when to stop when you're up or down. Okay, if you're up a couple $100 or $100, you've been trading for 30 minutes or an hour, go take a breath. Okay, eventually you're going to get hit. How much do you need to make a day, and learn to stop. We call it the 5% rule. It's under our in our forum. We have a training on it, and we're talking about steward, and it talks about when you're up a certain amount, stop, up or down. Don't get back all your profits. If you're doing really well, don't just go, oh, this is the day I'm going to become a millionaire. It's like, good day. You've made money. You're profitable. Withdraw some of that. Tomorrow, you get to come back and play again. That's what you're looking for every day, okay? Have good risk tolerance, good account size. Don't go in with a $500 account and put $300 on the line, okay? One contract at a time can do a lot more than you think it can, all right? So just don't over-risk your account. This was, Lori's chart she sent over to me. She was gracious enough to get that out to me. I was like, hey, can you send me your chart that you marked up today? And she's just showing you can see E and short and down close and with the trend catcher, and she was taking it. How's this going? Get demo trade. Talked about the free education over at Apex Investing. And we'll be talking a lot more about the trend catcher in detail next week for you. We'll be talking more about actually looking at these things at night as well. But the main thing is I want to get what are the basic questions out of the way on the 5-minute binaries and help everybody get past that so we can build on it this month. Every Monday this month, we're going to cover another level of depth on trading the 5-minute binary contracts. And of course, we'll always be teaching in the rooms and stuff. So you're free to come and join us and check things out over at Apex Investing. Any more questions before I wrap it up? So where yes, when you say buy, you're saying if you buy to enter, that means you think the price will rise. If you sell to enter, that means you think the price will fall. It's also known as going long or short. Awesome. We all have a great evening. And I know you're going to have questions. And like I said, I love these contracts. We're going to be having a lot of webinars on them. And we'll be posting more and more videos and stuff in the rooms and on the forums for you as well. Okay? So it ought to be out by next week, Lynn, the trend catcher. And it's already like showing, like in the rooms, most of the traders that are trading have it up. The leaders in the rooms. Thank you. Y'all have a great one.